The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour on this, almost lost track of the days, 18th day of January. My pleasure to be here. Dow is up 300 points at 24,668. Let me just go there for a second. Give me a second. At 24,670. Just hit the 200 period exponential moving average, I think almost 26,694. We just went above it. 24,705 was the high. And we're going to see if there's going to be some kind of digestive move right here. We'll talk about it in a moment. Let's just get the numbers out. So Dow up 302 at 24,672. The S&P, SPX.X. The S&P right now is up 33 at 2669. Only a leg C. This is incredible action. There should be a D, and the 200 period moving average is way at 2,700, and we have a high today of 2672. So I'm suspecting that early next week we get a peak C, a lower high maybe Tuesday. And then there's a sudden pop-up, and it makes its D as the Dow either extends D or makes an E. And then I think we're ready for a bit of a breather. Let's call it that way. All right, QQQ is up 1.96 at 165.59. This is still leg D at 165.60, and you've got a 200 period exponential moving average resistance line, and all the technicals are still very strong. So I'm just talking about the line itself at 167.28. IWM, right now the IWM is trading at 147.46, up $1.62. And this is going to be very interesting because it has had actually one of the best moves of all the indices. It's gone from 125 to 147, 22 points. That is really, what is that, about 19% gas? Fabulous. Okay, what's really important now is that the weekly chart has gone above the 14-period exponential moving average. MACD is still not cross-positive, but the stochastic is actually moving quite nicely higher. It's the daily charts in all the time frame, all the different sectors that are actually doing very, very nicely. Now let's get back to the nitty-gritties. We want to go to gold. Gold, I haven't even had a chance to look at gold. Gold down 10 at 1282. Remember that rectangle formation that can last a lot longer than your patience. And what we're looking at is, will the low of the 4th of January, 1278.1, be taken out? Or will the high of 1300.4 be taken out? I'm thinking that we're going towards the low. We just take it out, then we go back into this range. Remember, rectangle formation can last a lot longer than your patience. That's what I'm going to be teaching. That's what I'm all about for this coming webinar on Wednesday, using Chapman wave techniques, exits and entrances. But within that, there's just a confluence of ideas that we're going to be working on. I had a couple of questions about it, and the questions of, do you need to have the CD? No, it's important that at some point you have the CD, so I'll be giving you a lot of information from the CD in the interim. But most importantly, there are techniques. Look, you don't need to see that the MACD is crossed negative and the stochastic's way down to 67 to know that there's a little problem here, and that gold probably has limited upside just for the moment, because prices held very well, even though the technicals are weak. But look at that weekly chart. The weekly chart is saying, hey, we need a little bit of a breather, but this is still very strong. Silver is moving, at this point it is SI down 101 at 15.43. The one that I told you about is silver that's having weak technicals, and the price is still within a nice range, but it is headed towards in an uppercase A, an Eiffel Tower pattern, taking a little bit of time on the right. but it really looks like it's headed towards the January low, January the 2nd low of 15.385. So we're going to be watching this one very closely. Most important that I can think of right now is that it is under the 200 period moving average in the daily. So it's gone briefly. I say briefly, it's actually about 13 or 14 days. It's gone above the 200 period moving average. Now it's below. It's now probably going to go under and create a sine wave, just going around the 15.50 200 period exponential moving average. And that's the way I'm looking at it now. Let's go to EUR-USD, the euro. And this is going to be interesting because, remember yesterday we looked at it and I said, it's really not acting well. It's just, there's the Eiffel Tower from the peak F top of the 200 period exponential moving average. And as far as I'm concerned, that says that within the context of the currencies, the euro should really have been up in the 1.16 area. I'd say 1.15 and holding and trying for the 1.16 area. Instead, what we're looking at is just making lower lows and lower highs. The 9 and the 14 period moving averages, I'll be talking about these in great detail on Wednesday, my all-day webinar. Still time to get in. You can ask me questions, send them over to me. I'll answer them all weekend. I'll be around. So please feel free to do that. I think it's going to be really important time-wise. Yes, I'm going to be looking at longs. Yes, I'm going to be looking at shorts. I think shorts in very selective areas. I don't think that. Let's get into it in a little while. USD JPY. This is the euro. This is the yen. The dollar-yen currency pair. Strong leg B. That means the dollar must be rallying here. My dollar. Dollar is trading right now at. Yes, very nice. Leg C. So let me go through this. I think it's really worth it. We have been long the dollar since April. It made a low of 88. And then what happened was it had a rally and then pulled back a little bit. And we bought it April the 4th. March was its low. I think February or March. And I've held it. I've had subscribers saying, what do we do on it? And I say, I like the dollar. I think the dollar is the currency, the international currency right now. And as a result, I think that there's a good chance that over the next 6 months, even if gold has a rally, I think it's a separate thing entirely. And that what we're really looking at is that the currency has become a kind of a safeguard for many really big, maybe institutions, but I'm thinking countries. Now, I have no way of proving it. It's just the way I'm looking at the chart. The monthly is still strong. The weekly had this big pullback from the peak D. We took a little bit off, just a little off the top. We took something off because I said, let's take a little bit off. Money management-wise, you need to do that. I like what I'm seeing. I love the fact that the weekly has just, well, we haven't closed Friday yet. There's still a little bit of time to go. But at 96.32, it is slightly back above the 14-period moving average, trying to tackle that green 9-period exponential moving average. The technicals in the weekly chart are kind of weak. So I'm just saying that this could be still a sideways action that goes on a little longer. All right, so that's it with the dollar. Let's go to crude oil. Crude oil right now is trading up $1.50. Leg D. How many things? I'm going to do this to show you, and then when I get back, I'm going to show you leg Ds in so many indexes, stocks. I can't believe it. Leg D in the oil. I'll be right back. Basil.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, so we're just looking at the mini. The 2 minute is in leg D, the 5 minutes in leg F, and the 10 minutes in leg E. Let's see if there's a little bit of a pullback here. And let me just finish up quickly by saying the TLT, and then we've got our callers. TLT is down 71 cents at 119.48. This is leg C to the downside. My suspicion is that the money is coming out of bonds and going into stocks. We're going to go to our first caller. We're going to go to Ben in Tallahassee. Ben, how are you?
Good, Basil. How are you?
I'm well, thank you.
Great. So I got two questions. When looking at the diamonds, how much credence are you putting on the monthly where it looks like it's getting really, really close to bumping up against that 9 EMA? And I get the stochastic is improving, but it's still, it's still pretty low. That's number one. Number two, the weekly is still only in a leg A. And then three, we're in leg D on the daily. It just seems like it's a little bit of a perfect storm there for definitely some kind of a decent pullback. And then my second question is on the SPY. I know you talk about C1, C2. Do you ever declare a B1, B2 where it's possibly in leg D based on that? Because the B, there's 2 points that are pretty close to each other.
It's so interesting that you mentioned that. I've done so many charts already today. I just can't remember where it was. It in the futures? I don't want to take up time right now because you've got a very good question here, and I do want to get to I want to try to answer it. First of all, let me just say that every once in a while, if other things fit in exactly with what I'm looking at, I'm prepared to go. Let's just say you're looking at the SPY, and the SPY on the 10th of January went to a high of 259.16. Now let's just imagine for a moment there was a pullback the next day, which there was, a lower high of 259.01, and then the following session, or it doesn't have to be the following, but within a couple of sessions, there's a test of that exact high of 259.16. And then there's another pullback, and then it goes to another leg up. Every once in a while, if I see that the MACD or something in a shorter time frame is giving a kind of a reverse, a downside reversal right on that second exact top, but it didn't make the new high to go to a C, I'm inclined very often to say, okay, keep it in mind that that could be a B and then a phantom C, knowing that it is really not even a C because it didn't even go above B. But in my mind, I always, as you know, I like to be ahead of the game. I like to be looking at the wave count so that if I've missed something and it's at a C and I'm busy waiting for a D and the darn thing turns down, that I'm not just really stuck. And as a result, I'm inclined to keep it in mind, but I don't treat it as an official thing. I might in my trading do that. And very often what happens is you get the C and it pulls back sharply, but not so sharp as a D, and then it'll go back and it'll finally make that D. I actually just did that. Now remember, I just did that in the futures. There it is, right here. I made that a red C in the 5-minute chart, but now what I've done is I've moved it on so that in fact, sorry, I have to go back. It was earlier on that I did that. So I used it as a phantom peak. But I like to be as strict as possible. After all, if you've got rules and you're about to break your rules, that's not a good sign, because what's the point of rules?
Maybe a more specific question is, any reason why you couldn't legitimize a B1, B2 versus C1, C2? I mean, is there a reason why, the C can only be designated as that versus D's?
Now, I've done a whole thing where I've discussed what I call the Chapman wave phantom peak. That's really what we're talking about. I prefer not to use it because 95 or 90, even 8% of the time, it'll eventually get to what it needs to get, or it just completely fails. So this to me is just a more sophisticated way of doing it to be ahead of the game. So I might actually get out at C and it eventually goes to D. It's better than being at C when in fact you really are at D. Because now I'm waiting for it.
Basically, you're just trying to take the most conservative approach, which
absolutely, that's exactly my motto. Be conservative, and you last and you survive.
Yeah, I guess just changing gears back to my first question, do you feel that that's really the best way to look at the Dow right now, the way I assessed it, where we're very close to bumping up on the monthly against the 9 EMA, the weeklies in a leg A, and then the dailies in a leg B, where if there's a I know you've been talking about a potential pullback next week, but I guess my take is, I know you're not a volume person either, but this whole China thing still seems like it's got more time to go.
Let me deal exactly. You got a great series of questions. Let me deal with number one. Number one, I'm going to go backwards to your last point. All the issues that were here in late December going to the low are the same issues that we're looking at today. There's a mindset that is completely changed, and it's flummoxed. When I say a lot of people, I mean a lot of people. And I don't mean just us laymen. I'm talking about the real heavies in the business. I've been hearing a lot about what the heck is going on. Just everybody's saying, come on, what's going on? And I've been saying, we've got longs. We only look at the long side at this particular point. I've got no shorts. I haven't had shorts for ages for my subscribers. I'm looking at now this is going to answer your second part of the first part of the question, but I'm answering it backwards. And the question really for me is very simple. Will the stochastic at 96, which has been flat and holding there for at least 5 or 7 sessions, let's go to the SPY, that's what we're looking at, will that be a fabulous safeguard for a pullback? Number one. Number two is these flat, high-level 96, 95% stochastics can last for a very long time. When I say a long time, you could have another 7 or 8 candles, daily candles, with it still stuck in this range. So let me just answer the question as succinctly as I can. And one of the reasons why I'm so impressed with this market coming off the lows is that if you look at the chart formations, the dailies have gotten, a lot of them have got spectacular V-shaped patterns. Some of them are good V-shaped patterns, but if you look at the QQQ, if you look at the IWM, the Russell 2000, look at that V-shaped pattern. It's taken out, look at 146.76, which was the high back on the 12th of December. You plummeted down to 125. That's 21 points, and now you're back high.
So then I guess what you just said, though, to me is really important. When you say on the
hey, I don't want to cut you off. Can you hold on through the break?
Oh.
Yeah, so we'll come back. It's a good questions. I'll be right back. Dow's at 364.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back. We're on with Ben in Tallahassee. It's given me an opportunity to really discuss what I've been talking about with my subscribers. This is very impressive as a rally that is climbing a wall of worry. Even today, when there are so many people, I actually heard from people that I haven't heard from for ages talking about the market, saying, one person said, my wife's in 60% in the market, 40% in bonds. I don't even want to switch it. I just want to get out. And I said, just, all right, wait a week or two. Don't do anything yet. Just think it through. Wait a week or two. And a lot of people are in that same position. What? This is crazy. I mean, listen to what's going on in the world. And, oh, my God, it's the worst it's ever been.
No, I'm with you.
Look,
I'm with you. That was our conversation over the holidays, too. So if we look at the technicals, I guess to your point about when on the daily it's in the mid-90s on the stochastic,
right.
And you say it could last longer. I agree. I've seen it play out many times like you.
That is if it stays flat.
Where it can linger there. But here's my question. If you look at the weekly and the monthly, and those stochastics are poor, don't those trump the dailies? Because historically we've had a bull run forever, and where the weeklies and monthlies are, have great technicals, and when the daily gets in the 90s, it's got that to back it up. And now you got this, what I think is the longer-term charts trump the shorter-term charts that you gotta watch out. Like you guys say, you get smacked in the face by the the wave, right?
So now let me just do this, because you articulated very well a whole bunch of thoughts that I and many people have. This is you articulated the fact that the daily chart has really improved. The weekly chart has turned up a little bit to cross positive in the stochastic. In the MACD would take at least another 1.5% or more. But wait a minute, if you look at the monthly chart, the MACD and stochastic are very poor, even the Russell. So now let me go to the point that I've been making for a while. I think that once we started and we got the confirmation in the IAI, that is the broker-dealer, I needed them to rally, and they're rallying just beautifully. Once I got the confirmation that XLF, the whole financial, I didn't want just Bank of America, which we own, which is doing fantastically, but I didn't want a couple of stocks to do it. I wanted the whole XLF to move very sharply. That says to me, for me, in the next phase of the mega bull market, this is exactly there's something in music where in Bach, when he's passing over a passage from one voice to another, it's called an elision, where something like the baton gets taken over. If you've ever run a 400 relay, you hand over the baton. It's got to be precise. So what's happened is the baton has been handed over to what I consider absolutely key essential parts, and they are working. That's the Dow, because it's such a great mix, and that's the XLF, which is really terrific. And I wanted to see that
what
traditional...
but look at the IYT. That thing's still pretty crappy, I think, isn't it?
Look at the IYT today. The IYT today is up 2.61%.
Right, but on the weekly and the monthly, isn't it still pretty poor?
Yep, it is. But you understand that you cannot have the weeklies improve unless the dailies lead the way. You cannot have the monthly improve unless the thing. So now that takes me to my very next point, which is that my contention is that this is a really important phase for me to articulate my bigger point of view. What's going to happen next is there will be a point where we get at least 3 really bad news events coming together. One by one is okay, but if 2 come together, not so good. If 3 come together, that's where we're going to get that next arching over, where the Dow, the S&P, the New York Stock Exchange, the IWM, and the Qs all come back to, is going to be very important. And that's the point that I wanted to make. And I think that you articulated this first part. My second part to go with your concerns is that the weekly and monthly are going to improve if, for instance, excuse me, oops. Oops. The voice was going. Hold on. You say something. Come on, Ben, you can say something while I'm drinking water.
Oh, sure. I can talk. Well, no, I get what you're saying, and I think where you're going next is if the the daily looks good, maybe if we have a pullback next week, it's probably going to be how far does it pull back, and that's going to probably dictate, how much you go long or how much you go strong short.
Correct. But my point was also next week's pullback, I don't think is going to be the big pullback. I think that's a little later. I think it's early February that we get the pullback that really tests the weekly and the monthly charts. That's really my point. So next week's pullback is just going to be some part of a test of the strength. I mean, let's face it, the Dow in just a couple of days has gone up 600 points, right? Maybe 800 points in just 3 or 4 days. And you can give back, what, 600 or 700 points? And then you've gone back to 3 days ago. No, I'm thinking the weekly chart, it's going to be later on. It's going to be late January, maybe early February, maybe the second week of February. That's where I think we've got the next whole series of conflagration comes together, and that's where the real market test comes. So I think that right now it's still good.
Is it too early to give you the confidence that the weekly is on its way to a leg D?
That it started a buy signal to buy mode. I have to wait for the end of the day today. That'll be the first test. And then I'm probably going to have to wait all of next week before I can even issue a buy signal, even though the point move has been fabulous, because the technicals, they are just starting to come into play as being pretty good in the weekly, at least pretty good for now. So I'm going to wait before I even get, once I get a buy signal, I've got a feeling that it's going to be almost like buy signal real close to a buy mode, but I'm not going to anticipate that until it happens. And you can see we're now bumping into the 200 period moving averages all around. I think we're bumping into strong resistance here. Next week, a little bit of a pullback, then more rallying, and then I think we've got to be careful.
Got it. Good. Thank you very much, Basil. These bounces are always tough to digest, for sure.
Thank you very much for calling, Ben. Good questions, and I like to deal with it. Have a great weekend. So, folks, let's do this. As we're about to go to a break, and my voice just come back, it better not fail by Wednesday. I'm going to be talking all day. So let's just do this. We're talking about, so Ben mentioned the IYT. He's absolutely correct. Up until yesterday, I was looking at the IYT, and I thought, you know, this together with the semiconductors, these are my little benchmarks that I need to see moving. All of a sudden, today, the SMHs up 2.45, up 2.7% at 93.09. Nice rebound, got very strong resistance coming up at the 94 area. So this is, I needed to see the semis start to move higher. I like that. That's very important. And the other thing is that I needed to see a real snap to the upside in the IYT, and we've just got this. Leg C. And that says there should really be I've got a buy mode in the daily daily IYT, the iShares Dow Jones Transportation Average. Like the S&P, there should still be a leg D, and you have to wait at least until Wednesday of next week where you can get that. I'll be right back. Dow's up 354. Basil Chapman, I can take questions out.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're looking at this right now. Look at this. A rectangle formation can last a lot longer than your patience. So we've got the Dow in the 2-minute chart made a high of 2676. Had a little low of 2672. And here it is. It's right on the cusp. It's stuck in this range. Can it break out, or will it just stay in this range for another 10 minutes or so? That'll be 5 bars. That's amazing. Look at this, the longest it's been in the sideways pattern. Oh, it's such a powerful move. And a peak F in the 5. Okay, so now let's get back to our nitty-gritties. Within the context of the market, someone just mentioned Cronus is breaking out. Yep, it's very nice. And one of the reasons why I wanted my subscribers to, we've got the generic, we've got the ETF, because I as much as I love the individual stocks, just for the initial move, I just wanted to be in there because I think it's so important. But some of them have had really good moves just lately, as we've been talking about it. I like that. That's very, very nice. And remember, I said GBTC, that Bitcoin, I could have a bit of a bounce. I don't see anything in Bitcoin right now. The sexy area is the marijuana area, the cannabis area, call it whatever you want. But that's where there's play, and it's going to be up and down, but it's in play. And that's really important. Next thing I wanted to do is to talk about in my webinar coming up on Wednesday. So a couple of people asked me, if I don't know the actual alphabet of the Chapman wave, all you have to do is know up to G. Actually, it's up to D, which is the most important thing. I'm just joking. What you really want to do is you want to think of this as the structure that I'm going to be analyzing. I'm going to be talking about the chart patterns. We're going to go through. Let me just grab a letter. Let's grab a letter. Let's grab A, because A is Agilent Technologies. Love that stock. Another one that I love that we always miss getting, trading at 71.95. I haven't updated it for a little while. We can look at patterns. Look, have a good look at this left side chart. You see this W? Look, comes down, rallies, makes the dreaded H pattern, takes it out, makes a lower low. Then as it does that, it closes above the left side high, low, which is very important. But look at the MACD, turns around and crosses positive. Look at the stochastic. When it made C, there was already a positive divergence. And now you're only in leg A. This is leg B. It's still early in the move to the upside if the stochastic holds in the 93, 95 area. And it's at 93 right now. So you don't have to know the names. You don't have to know there was a peak F. I love it if you do, and I have people that know my CD backwards and forwards, but it's not. The webinar has to do with structure. It has to do with not knowing what the news is, just looking at the chart. Look at the cup formation on the right side. Look at the way the right side technicals back in January were way stronger than when it made another all-time high, just like the Dow that was in December. and yet it hasn't broken down. So these are things we're looking at. So there's so much you don't have to know. There's so much that it's nice if you do, but you can catch up. So that's what I wanted to mention for my webinar on Wednesday. It's all day. It's 9 o'clock. And as we start looking at the patterns that are most important, why they're important, how to recognize them, how to make a template of this H pattern, how to make a template of a successful cup formation after you've made this W. Look, look, look. There comes there are. And now this is the little H that turned out to be unsuccessful at first and then successful, giving a fabulous turn to the upside. We're going to be looking at different, you name the stocks, and we'll talk about them in great detail. I'm not telling you whether to buy or sell because this is an analysis. But at the same time, we're going to look at entry points to buy and where to sell or where to add to. With a move like this, it's even been hard for me with all this technical stuff to actually add to the stocks. They haven't pulled back to where some of them I wanted to add to or even just get in. And I wouldn't say it's a nice problem to have, but it's better than being wrong, better than being short and just seeing things wiped out in a second. Question I see in the den is UNG. S&P wants to know. UNG is the United States National Gas Fund. It went to a peak C- in the daily and then pulled back, but that happened to be a peak E weekly. And because of that peak E weekly, there was a sell mode. So it's been in the sell mode from the 40 area down to the 24s, trading right now at 27.81. You know, I within the context of the Chapman wave methodology, when it comes to the commodities, there are moves overnight. And those moves overnight tell me that within the context of the patterns, I would say to you, you've had an island reversal up. You've also got an island reversal down. So at this particular point at 27.82, I would only be able to say to you, under 26, that's really very poor action. Not going above 28 in the next 3 days, not good at all. But if there is a sudden turn to the upside and it starts to take out 28.54 and then goes to 28.90, and then all of a sudden you're looking at 29.30, that's going to be a big improvement because the technicals are going to improve. So at this particular point, I'd say the weight of the downside is so strong. I need price movement to give me the veracity of a leg ABC, of a new leg D that's going to be sustained. And the only way you're really going to get that is to have a decisive move above 30.33. But what's the use of 27.83? Because you're going to miss 3 points. I'm going to say to you, on a very short-term basis, if on Tuesday when we get back, it's trading at 28.39 to 28.42, give it just at least an hour or so. If it's holding well, I'd say at that point you can just you could start a position. United States Natural Gas Fund, but I wouldn't do it if it's trading in this area. And the other thing is if it moves very quickly, you want these green candles haven't held. The red ones have been pulling back. I want a green candle that holds. So if it closes at the high of the green candle today, and Monday is a green candle around about 10:30 in the morning, Tuesday that is, then you could start a position. Make it a small position. This is one I would add to if it broke above 30.33. Hope that answers your question. Next question is, Trin, I'll look at that in a moment. So I wanted to do XLK. XLK is the tech sector. It's a leg C. Good action, but not great. But it involves a chunk of the tech sector. So that's good to look at it in that regard because it's saying there is an improvement. I have to put an up arrow to say there's a buy mode right there. Now, what's really important about it, question of the den, are you no longer using your 5 count? Yes, I am using my 5 count, but I'm using it specifically in certain areas. And I often do that. I stick, you remember my stalk take formation for 10 or 20 years. I stuck with it just in only the Dow, and then I started using elsewhere. So this is the case where I don't want to start talking about something that really hasn't been proved the way I like to prove it. So yeah, Chapman Wave 5, that's my CW-5 technique. I use it in the 120-minute Dow and the daily Dow, but just for now, that's about where I keep it. I'll be right back. Dow is up 344. Let's see how about our 2-minute has it held right on the border. Let's see if it holds the support.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Answer to my engineer is yes, I will be able to do it. So here we are. Look, the 2-minute chart on the E-mini gave that peak D, but then there was a fractional new high, and that became an E right there, and I put a little inverted hat because I've used up my down arrow already. And that says right here, at the E in the 2-minute chart, the D in the 5-minute chart, think of it daily, weekly. Now the monthly has a leg F and it's starting to pull back, but no signal yet. So this says to me that if there's a move below 2668 right now, the 267,175, I've got a sell mode in the 2-minute chart, just a sell signal to start off with in the 5-minute chart, nothing yet in the monthly or the 10-minute chart, but at 2667 to 2666, I'm probably going to have a down arrow in the 10-minute. And that's the way we're going to study the charts on a Monday. But we're going to, on Wednesday, we're going to look at them in real time, but we're also going to do them thoroughly, as we were discussing with Ben, how these different time frames work, the daily, the weekly, the monthly. So think about it. Go to the front page of TFNN, check it out. This is the all-day webinar with me on Wednesday, the 23rd, 9 to 12, and then 1 o'clock Eastern Time, 1 o'clock to 4, and then 4 to 4:30. We kind of wrap it up. Throughout the thing, I'm saying, what were you wanting? What are you looking for? And what's the next step that I can do to help you? Each person's going to be helped out. You're going to be practicing these things by yourself. I'm going to give questions, say, what's next? What do you think? What do you think? And why? And we will discuss it. So it's going to be, I think it's going to be really exciting. So stay tuned. You've got Steve Rhodes coming up. You've got Dave White. You've got Tom O'Brien. And have a wonderful long weekend. I'll be back on Tuesday. But in the meantime, back at the ranch, I love what's going on here. We're getting really close to some kind of a pullback, but these vertical moves, when they pull back, they don't just turn around vertically and go all the way back down. They usually have a stair step down, try to create some kind of support, have one kind of test of the recent highs, and then it can take time. Maybe not so much price, but time to consolidate. So I'm thinking highs next week, early part of next week. Then we have a retracement. Then we have some kind of ricocheting to the upside, mixed market. And then later in late January, early February, start pulling back sharper. Have a great day. Have a wonderful time. I'll just be back in a moment to give the update, the TFNN update. Thanks for being here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.